Good morning. You're watching a home broadcast of Business World Live. I'm Danny Laurel. It's 10:30 a.m. this Tuesday. We're about an hour into our shortened trading day. Let's kick off with our top story. The country's manufacturing output fell to a record low in the month of April as the extended community quarantine barred manufacturers from operating at their normal levels. The IHS market reported that the Philippines Manufacturing Managers Index, or the PMI, slumped to 31.6 last month from 39.7 in the month of March. IHS market said that indicates another steep decline in operating conditions across the manufacturing sector. April marked the second straight month of a contraction. A figure below 50 signals deterioration in operating conditions compared to that of the preceding month. The data showed that the reading fell in all five indices, namely new orders, output, employment, suppliers' delivery times, and also the stocks of purchases. IHS market said production collapsed in April and declined at the quickest pace since January of 2016 as companies were not able to fully operate because of the Luzon-wide lockdown. Now, despite this, market said job losses softened in April, which indicates a slightly better outlook for future output. It said more firms were, quote, more upbeat as easing of the lockdown restriction looms, saying work on new products and the completion of pending items will then resume, but it noted that the confidence remained weaker. The enhanced community quarantine in Metro Manila, Calabarzon, and a few major cities are extended until May 15th. The market data also showed that ASEAN neighbors, Vietnam, Malaysia, Indonesia, and Myanmar also recorded a drop in PMI. Okay, pulling out my terminal for you so we can see how we are opening today, bouncing back a touch above 5,600. That's actually a strong open. We're up by 1.2%, 5640.80. This, of course, on the back of a very tough session that we saw opening the month of May yesterday. We were actually snapping a 3-day climb from the week prior. And this, according to Phil Stocks' Claire Alviar, the weakness that we saw in the markets yesterday were on the back of precisely that PMI figure that I had just reported. So we were down 2.2% yesterday, slowly inching back a touch. You can see that on my screens here. Now, on the back of this, we also saw, nevertheless, net foreign selling continuing. So an exodus for the 33rd straight day. We lost around 509 million pesos from those foreign investors. And another thing that she said, this from Claire Albiar, is that the dismal GDP figures that is going to be coming out, this is for the first quarter, and that's coming out on Thursday, is being anticipated by investors, and some had already been exiting the market ahead of that. Speaking of GDP, you're going to be seeing on your screens here how Fitch has been the latest to add to the chorus of revisions downwards. So now they're projecting a 2020 GDP. Nevertheless, it's still a growth, actually, a base case of 0.5%. Nevertheless, this is significantly lower than just their March estimate, which was a growth of 4%. And still, they do say that there is a possibility of a contraction or negative growth in the full year if, of course, the first quarter GDP figures come in weaker than expected. So they said that those March 7 figures could prompt them to revise their forecast into a contraction for the full year. But they did say that the second quarter is almost already certain to be negative. And they quote, I quote, the Philippine economy is on the cusp of a recession. This is according to Fitch. They're also looking at private consumption to contract by 2.5% for 2020. Now, just a quick peek, because at 9 a.m. today, we actually saw inflation figures coming out. And that's, you can see that on my terminal here, how that has come out. That is at 2.2% for the month of April. We actually had an estimate of 2.1%. So this comes in a little bit higher than what analysts surveyed by Bloomberg had been expecting, but it's nevertheless lower than what we saw in the month of March, which was 2.5%. So again, the increase in prices of goods slowing down compared to the month of March rather, and also well within the government's target range of 2 to 4%. Now, quick peek at our global equities here, because I just want to show how Wall Street had performed overnight. The rally actually did happen a touch, And this despite the fact that we did see global stocks seeing a bit of a lower opening on Monday. Wall Street actually bucked that downtrend. A lot of analysts are saying that investors are fearing a second wave of infections. There's a bad stream of economic data trickling in across different countries. And here's one thing to be watching out for when we talk about the US and China. This from PNB Securities is Manny Lisbona. There's more Sino-US tensions, and that is what led to our market decline on Monday. We moved across with the rest of the region. But let's check how Asia Pacific is actually opening today. Note that Japan, China, South Korea are all closed still on that extended Labor Day holiday. But you're going to be seeing the Hang Seng that's actually up by 0.9%. Interestingly, that on the back of having been in focus yesterday also, as their economy had contracted by 8.9% for the first quarter. That is the worst they've seen ever, and that had beat economists' forecast of a drop of 6.5%, so beat it even downward. So a lot to be watching out for here as markets percolate across the region. More on that with Luis Lumningan from Regina Cap later in the broadcast. Meanwhile, let's check in on other headlines we're watching this Tuesday. President Duterte ordered the temporary increase in tariffs on imported crude oil and refined petroleum products. The extra revenue will be used to fund the government's COVID-19 relief measures. The government will impose 10% additional tariffs on imported crude oil and refined petroleum products in line with the recommendation of the NEDA. The higher tariffs will be imposed on top of the existing MFN and the preferential import duties on imported fuel products. Now, Customs Assistant Commissioner Vincent Baronilla says the higher import duty may provide substantial revenue for the government. That's despite the low demand for petroleum products. The Philippine Chamber of Commerce and Industry is calling for more funding for the agri-fishery supply chain under the government's proposed fiscal stimulus measures. The PCCI says it supports the proposed Philippine Economic Stimulus Act, or the PESA, which will inject up to 1.4 trillion pesos into the economy from 2020 to 2022. Now, this is seen to help businesses recover from the effects of the COVID-19, and this funding includes interest-free loans for MSMEs and wage subsidies. Agriculture and fisheries have a 10 billion peso loan allocation. But PCCI says the industry needs a bigger allocation, which will cover loans, guarantees, and grants for inputs such as seeds, fertilizers, machinery, even research and development. Chamber President Benedicto Yujico says the sector has been neglected for so long, and only now under the crisis is the sector being put in the spotlight for its importance in feeding the nation and, of course, reviving the economy. The decline in overseas remittances and BPO revenues could result to a wider current account deficit. That is according to a note issued by the Mitsubishi UFG Global Research, which was out on Monday. MUFG said the decline in remittance and BPO revenue could offset the impact of a narrower trade deficit brought on by the drop in oil prices. So last year, the current account deficit narrowed to $464 million. That is significantly lower than the $8.7 billion deficit that we saw in 2018. The BSP said this is due to lower trade and goods deficit, as well as a higher net receipt from the trade and services in the primary and the secondary income accounts. Now, before the COVID-19 crisis, the BSP projected 2020 current account deficit to stand at $8.4 billion. That is to reflect the government's infrastructure spending. But now, because of the pandemic, the current account deficit may widen as the cash remittances, which is one of its components, is now expected by the central bank to drop 0.2 to 0.8%, as some OFWs are getting repatriated and many are facing possible layoffs. MUFG said it also sees lower revenues for the BPO industry because of the falling demand during this crisis. So markets have so many things to be digesting today. You've got the PMI print that's still spooking investors. You've got the inflation coming in slightly higher than expected, another GDP downgrade from Fitch Solutions, and again, some geopolitical tensions offshore. Now, here to help us parse through this chaos, we have with us Luis Lumingan of Regina Cap. Hi, Luis, are you there? We're welcoming you to the broadcast.
Hi, good morning, Danny, and I think I can hear you well now.
Okay, perfect. We've been trying this over and over. Okay, so Luis, just gonna kick off global here. So you've got this new thing looming now, which is a possibility of another trade war between Trump and China. Yet again, now on the back of this COVID-19 issue, you've got Hong Kong contracting in the first quarter, the worst ever they've seen, and that is after a lot of hopes had been pinned on China recovery already. So, how affected would we be in this case? The sentiment is now soaring yet again after we saw global equities finally staging a rally last week. What's going on right now?
Well, so many things happening, a lot of moving parts just to get all the economies up and running again. On one hand, you have some countries that are debating whether they think they can already release, or rather they can lift the restrictions of the lockdown. There are others such as us that are thinking, well, is it should we even extend? And of course, as you mentioned, I think they were saying there's going to be a trade war version 2.0, where President Trump is thinking of uh, you know slapping these sanctions on China. But I think that that's already at the back burner as of this moment. I think everyone wants to just be able to have a sense of normalcy and be able to resume business as usual at this point. And of course, let's not forget what's happening with oil. It's been at one of the most volatile trading sessions we've seen in history.
Can you comment more on the oil story here? Because that slumped into negative territory. Some analysts had said that was just a glitch, diba, in the system. That was the May deliveries. Now it's we can see that in my terminal right now. That's actually back above 21 levels. Does this show anything fundamental in terms of the outlook of on the global economy? It's eventually picking up after the May deliveries.
Well, I think the story or the narrative hasn't changed. That the economy is perceived to be slowing down. In fact, they say it's a recession based on several countries reporting negative GDP. Now, the angle you have to look at is the exporting countries who are dependent on oil. Are they going to cut down their supply? And some people are asking, why can't they just cut down the supply and make it easier on their end? But of course, I think there are a lot of factors you have to consider. It's the if you cut it down, other players might come in. Maybe at the same time, it's hard to also restart, and then you have to lay off all these people as well. It's not as simple as it seems, and that's why I think they couldn't reach an agreement. Now, as to that, what their supposed glitch.
Okay, we're losing Luis at this moment, but since he's on the topic of oil, let's try and let him reconnect. Just to show our viewers here how oil has, in fact, as he mentioned, pared back those losses. You can see it trading at 21 spot $80 to a barrel now. That's actually $1.40 up since its last close. We're trying to get Luis back here. There you are, Luis. Okay, we lost you there for a little bit. Go on. Okay, go on. We were talking about the downside risks here to the global economy. So that's still very much on the table, especially since a vaccine has not yet been there. But now there seems to be more hope on a vaccine coming in 2020. At one point now the global stocks rallied, oil is getting better. Are the downside risks still outweighing the upside risks at this moment?
I think yes, it still outweighs the upside risk, and Well, for one, I cannot speak on behalf of the medical community because I'm a layman, and I just get all my information from what's happening, outside, and how they, what they tell me, and what the way I understand it is that the vaccine is still a bit far at this point. Maybe we could get lucky and then it becomes successful, but based on what they say about clinical stages and these things that both of you and I are also just learning this year about the vaccine and a cure and what's needed. I think it's a bit premature at this point, and that's just my call. But you don't know. Maybe someone. I heard of this the doc this doctor. I think works in Oxford. I think who developed the vaccine for Ebola, and I think they say she's very close. That's what I'm trying to monitor. So really, that's why I think everything is very volatile. We don't know really when this going to end in sight, and I think because of that, there has to be a lot of um, I guess, uncertainty at this point, and that's how we make of the situation. It's very different from all the previous years. At least, if I may go back historically to what happened in Lehman Brothers, there was going to be a crisis with the housing market. It would probably last for a certain amount of time, but this was something financial in nature and an impact that we could calculate, and something that was very close to home because it was what is it was something that we understood. But this one, of course, something that is very alien to us at this point.
Luis, let's turn domestic. You mentioned there's a lot of uncertainty on the future, but now we've actually started getting some figures during the lockdown. So during the mid March to April period, in particular the PMI, expected naman that this would contract, and we saw the rest of ASEAN also contract. But the big question is this contraction something temporary because of the lockdown? Or is this something that's going to be persisting because global supply chains are cut even if a lockdown is eventually lifted?
Well, I think this is going to persist as the lockdown continues. Afterwards, I think everyone is at a guess as to what's going to happen, especially if there's no vaccine yet. Some people say that everyone will be hesitant to go out, to eat out, spend on entertainment, and to travel. I also heard stories, or there were some, uh, I think, news feed that they were saying that I think in some provinces where they relaxed the restrictions, people were flooding the malls. So really, it's a case-to-case judgment at this point as to what's going to be happening once the lockdown is lifted. But I think the real game changer is the vaccine, which everyone is waiting for. I think once that happens, then market will fly because again, once you certify a vaccine that can be delivered and that I think can be produced in massive quantities, then at least that will really help the market and everyone, I guess, will affect.
Luis, let's talk about consumption since you're already on the topic. Inflation came in a little higher than expected, but nevertheless pretty low compared to all the previous ones we've seen, diba? Is that going to be helpful in any way for consumption to be picking up? But do you see some upside risk to inflation, especially with the basic goods? Kasi may shortages na sa food, and even delivery services now are becoming very expensive. So maybe everything else is cheaper, pero when it comes to food, it's still going up higher than the 2.2% average print.
Well, I think for some basic, uh, food groups which are a necessity, I think it's necessary. I know that anecdotally they were telling me, like say, like the infant formula. I think people were hoarding at one time when lockdown started because it's hard to go to the groceries. Of course, cleaning agents as well, vitamins. Those are going to be the obvious ones, and of course, that's why I think people have been buying up the consumer heavy stocks, especially retailers such as Pure Gold and RX. I think for others that are more that aren't as essential, probably there's going to be a dip because some people will say, well, I don't have to, or there's no time for us to to enjoy and celebrate. We have to save. We can't spend on more expensive food at this point. But again, it's really hard to second guess everyone's uh,
Mm.
buying habits at this point. But this is only how we're interpreting the data that's been coming out.
Okay, but I mean, I know, like you said, it's so hard to determine it. But is there still a possibility to what's gonna come out on Thursday when we talk about the first quarter GDP? Why is there such a huge range? You know, some still expecting it to be negative, given that that was mainly before naman the lockdown. Even Fitch saying they're going to wait for that figure before they revise the 2020. Why? What is the wild card here, and why isn't the first quarter? Why is there no consensus on the first quarter?
Well, I think it's how people are booking, let's say, the specific output. For example, when I talk to property companies, some were saying that, well, for the month of March, they were down, and maybe they were trying to, or maybe they were moving some of their sales to April just to show something, right? Like some
Okay.
were saying that their sales were down 50% from March of last year. And I think Jan and Feb weren't exactly the best months to be selling. Remember, there were also some, I guess, uh, situations we were facing, such as the Taal eruption. Of course, look at other industries that were severely affected. Let's say hotels that had to close, they're getting zero business. Some of the establishments in malls that, especially that are in food, that are in entertainment, they're probably getting close to zero business as well. Cinemas, I'm sure, are all closed right now. Travel, for one. So this one angle, and where analysts are saying it's probably going to be negative, but there are others are saying it's going to be positive. For one, yes, it actually was implemented rather late. The probably counting around 18 days for the
Mm-mm.
first quarter. And of course, there's a surge in spending, especially for groceries. So maybe it's not as bad as it seems. So that's why I think the range has been quite varied. I think I've been seeing estimates from plus 3%, negative 2%
Oh.
for the first quarter reading at this point. And it's anyone's guess at this juncture.
What are you pricing in, Luis? What do you think markets are pricing in when it comes out on Thursday? What's going to be what should be a positive surprise? Anything but that's positive, okay na yon? I mean, what's gonna spark a buying spree?
Okay, my sentiment is might be leaning more to negative, and anything that's on the past and that will be above zero, I think would be welcomed by the market. Uh, I'm not just being pessimistic, but based on what the other economies have been reporting. For example, I think it's an extreme. You have the extreme case of Hong Kong and China, which implemented the lockdown much earlier. They fell by 8.9% and 6.8% respectively. And then there's the U.S., where the a lot of the restrictions were mainly on New York City. Right? I know it's a financial powerhouse, but we're talking about one city that has a population of maybe 20 to 25 million, and the whole U.S. is 360 million, and they implemented restrictions on the city towards the end of March, and yet it fell 4.8%. So I'm
Okay.
trying. So based on what that everyone is posting negative growth, I think it would be a positive welcome relief that we're able to still have positive or even flat growth for the first quarter. But based on how the other economies are reporting that data, probably it's more I'd say more inclined to the negative.
Okay, so anything positive is going to be appreciated at this point. Luis, let's talk about specific stocks here. You're going to be seeing on my terminal here the best performers. Metro Pacific up by 9 and 2 tenths of a percent. Ayala Corp up by more than 7%. Suffice to say, this on the back of President Duterte last night making peace with Zobel, and also, MVP is saying, even apologizing for the remarks. Is this going to have a fundamental impact on these companies? Is this just a knee jerk, happy, sentimental reaction to those remarks?
Well, I would like to think that the remarks of the president were rather sincere, and I take it at face value from what he said. Right? I mean, uh, Because for one, it was rather unexpected. I didn't see any specific trigger for him to mention it. Of course, these business groups, along with others, have been doing their share and more, going above and beyond what's needed of them, just to help people who are suffering, keeping their employees, hired and giving them a lot of benefits at the same time. So probably, I think moving forward, I would hope and uh, it would be again welcome for the administration and these business groups to be working more closely together. Probably, I think there's a bit of an overhang from um, like some of the uh, I guess some of the deadlocks regarding I think with Manila Water and Maynila as well. So probably I think there might be a much more quicker resolution to that. I guess after this pandemic, I don't think people want to be dealing with a water crisis or maybe even a power crisis. And I think they want to just deal with that as quickly and I guess efficiently as possible so they can move on to more important things.
Okay, and just for our viewers to note here, Manila Water, take a look at my terminal, 11.5% up to 11 pesos and 66 centavos. So really inching up back to those levels that it saw before all of these tirades from the president. Luis, let's move on to Globe because they just had their earnings for the first quarter. I'm just going to break that down for our viewers here. First quarter net income, 6.6 billion pesos, down 2%, plus expects the second quarter revenue to decline by low double digits, cuts the dividends to conserve cash. I mean, ito na nga yung favorite stock ng lahat ng analysts, di ba? And now they're saying that people will have less money to spend on the data. What's your outlook on the telcos?
Well, we don't see. We know that they're going to be the ones that are going to be going against the trend. I think they will still be benefiting especially in the second quarter. And again, remember the pandemic happened in the last 2 weeks of March, so I don't think you're going to see a bit of an impact. I think a lot of this probably we're making provisions. I think their operating expenses went up. Since I, I assume they were making I guess all these necessary adjustments in case for the increased data usage. And again, just like all companies, remember, like the retailers, for example, when they closed, they were out of business for 2 weeks. But later on, they adapted. They went into delivery. They went online. I think the same is the case for with LDT. A lot of these companies are going to notice that well, we have to rely on online at this point. It's the only way to go. I think they were saying that after this lockdown, people are accepting, well, if we can meet somewhere face to face, we're going to change it to, well, can this be done online? And I think probably it's too early to dismiss the decline in Globe's performance. Probably in the second quarter, I would think that there might be some adjustment as well. But again, there's
Okay.
this demand for these companies.
And in fact, Luis, just to point out here, Globe is bouncing back. I mean, it was swinging from gains and losses this morning, but still, after that announcement, it's actually still on an uptrend for the past 3 days. I just want to take a quick peek here on the ANR for our viewers to note here and what they're saying. Yeah, 9 buys. So medyo nagiging mix na 9 buys, 7 holds, and 2 sells for Globe. But as you mentioned, it all depends on whether the other businesses are going to be opening then and using their data. Finally, Luis, before we let you go, it's 11 o'clock. I have so much to ask for you pa. Pero how can you, may year-end call ka na ba? Some houses have already revised. And do you have different scenarios for that?
I think it's too early, and having a year end call, I think, assumes that you know how this pandemic is going to end. Uh, even with the lockdown, everyone is still torn as to what's going to happen after May 15. Will they gradually increase it? Will they gradually relax the requirements? Will it continue? So I think it's still a bit premature at this point, and everyone I think is still at the it's a moving target, so to speak, this year and forecast for the PSDI, not like the previous years.
Okay, but is it okay? Do you see some sort of uptrend at least for the short term?
Well, I think at least for the short term, since they think that at a certain point, or rather, it's getting closer to we have to resume business, and that the administration is making the necessary steps with mass testing, I think, and probably the certain protocol that has to be met so that businesses can already start to resume. So I think that's more of the silver lining, where as opposed to uh, whereas opposed to 2 months ago, where they suddenly just uh, put the clamps on the general economy and didn't, and everyone was in the dark. Now I think we're already starting to regain our foothold.
Okay, so still a lot of downside risks actually, a lot of unknown moving parts there, but for the short term, some bright spots in terms of clarity on the next steps of government in the next few weeks. Thank you so much. That was Luis Limlingan of Regina Cat. Thanks, Luis, for joining us this morning. And that was a first look into the business day. Today is May 5, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danny Laurel, and we are One News.